What's going on, everybody? My name is Zach Hartley, and in this video I want to walk you through how to get started investing here in Canada. Here is everything you need to know. Let's go. Okay, so the first thing you're going to want to take a look at is your current situation and your current financials, and you're going to want to focus on your debt. And in particular, any debt that has an interest rate above 10%, you want to pay that off before you start investing. The reason for that is because when you start investing, you can probably expect to make on average 7 to 10% in return on your investments in the marketplace. At least that's what the S&P 500 has generated in returns for the average investor over the last 40 years. Now, if you have debt that is accruing at a higher interest rate than what you can expect to return in the market, you are better off using your money to pay down that debt because it's going to get you out of debt faster and get you to investing sooner. But if you invest that money instead of paying down your debt, you're just going to keep accruing more and more debt and you're not going to make any progress. So if you have debt over 10%, pay that off first. Now, when it comes to getting money ready to go for investing and saving up your money, what you really want to focus on here is regular contributions to your investment account. You want to take off some money off of every single paycheck before you start spending it. Warren Buffett had a really good quote, and as soon as I heard it, it stuck with me for life. And he said, "Do not save what is left after spending, but spend what is left after saving." And it literally comes down to your priorities. What is more important to you? Is it saving money or is it spending money? Because that's what's going to determine the order that you delegate your money into. And so you need to be very careful with this. I truly believe you should just take a fixed amount off of every single paycheck every single time. Then whatever you have left to spend on yourself, you need to make it work. That's how I look at it, and that's how you should look at it too, because the more money you can contribute to your investments, the sooner you're going to be able to retire, the sooner you're going to be able to do whatever the heck you want to do. Now, when it comes to getting ready to actually get in there and make your first investments, the first thing you need to do is choose a brokerage. That is basically the software or the platform that is going to make the trades for you and hold your money. Now, here in Canada, we have a couple of different options. The two most popular options are Wealthsimple and Questrade. Now, I have links for both of these down below, and it's really nice because if you sign up for Wealthsimple, you get 2 completely free stocks. They're randomly chosen, and they could be valued up to like $3,500. So I highly recommend checking out that link. It is well worth your time, and it's literally just free money. Now, if you're interested in doing some swing trading, some day trading, or looking at the price chart for an individual stock, that is when I would recommend you go with Questrade. This is where I have most of my investments. This is where I use on a regular basis. And if you use the link down below, you get $50 in free commissions. If you live in Canada or anywhere else, I would recommend Webull. Now, what you need to know here living in Canada is that we have a couple of things called registered accounts. Registered accounts are accounts that the government has access to and they can see what's happening in those accounts, but they also give you tax advantages. For instance, here in Canada, we have something called the tax-free savings account, and this one's really, really nice because if you invest into Apple at $100 and you sell some shares at $200, you don't have to pay any tax on the profit that you generate within a tax-free savings account. Now, there are some limitations to it, and you can only contribute so much to this account every single year. Usually it's around $6,000, but it's really nice because you can invest your money and pay absolutely zero in tax on the profits. On the other side of that, we also have the Registered Retirement Savings Plan, or RRSP account. This is a really, really nice account because it can help you to lower your taxes. So for instance, if you make a lot of money here in Canada, you could be paying anywhere from 40 to 42% tax on every single additional dollar that you make. And when you contribute money to your RRSP, what it does is it lowers your income for that year and you only pay tax on a lower amount. So if you make $100,000 and you contribute $20,000 to your RRSP, you will only have to pay tax on $80,000 worth of income. And it basically allows you to save money without paying income tax on it. And it's a really, really beautiful way to lower your tax bill, save up money for retirement, or save up money for your first house. In the US, those types of accounts are called the Roth IRA and the 401k. Now, when you're ready to actually go out there and invest your money and make your first purchase, I personally recommend buying an ETF. An ETF stands for Exchange Traded Fund. Now it sounds complicated, but basically what you're doing here is you're going out and you're buying one security that trades just like a stock, but inside of that security, you actually have a basket full of hundreds and hundreds of different stocks. And it's really nice because you go out and you buy one ETF and it's basically the exact same as buying hundreds of different stocks. And so an ETF is a group of stocks that trades as one. It can be bought and sold like a stock, and it gives you great diversification. So most people, when they start a portfolio or they start investing, they want to have securities or companies or investments in different industries. And when you buy an ETF, you can do that very, very easily, and you can do it instantly, which is absolutely perfect for anybody that does not want to pick and choose individual stocks. Now, here are a couple of popular Canadian ETFs. I personally recommend all of these. They are all very good. There's nothing wrong with any of them. And if you built a portfolio just out of these 5 ETFs, you would do just fine. Now, the VFV, you would go into your mobile application on Questrade or Wealthsimple, you type in the ticker symbol VFV, it will show you exactly how much it costs for one single share of VFV, and it will give you diversification and exposure to the entire S&P 500, which is the 500 largest publicly traded stocks in the United States. Now, if you want to focus a little bit more on technology, for instance, you could buy an ETF that focuses on the NASDAQ 100, which is the 100 largest companies in the NASDAQ, which is very heavily made up of technology companies. The ticker symbol for that is XQQ. Ticker symbol is what we look up the different securities by. It's usually a 1 to 4 digit capital letter, basically paraphrase like this. And this is what you can search these up by. And so when you buy one share of XQQ, you're actually buying shares in the entire NASDAQ 100 index. Now, if you don't want to buy shares in a large group like this, you could even buy an ETF that focuses on a specific industry. Here in Canada, the VDY ETF will focus on financials, XEI will focus on energy, and VRE will focus on real estate. And so when you buy any of those ETFs, you're actually buying a very diverse and large pool of companies in that specific industry or in that specific index. And so it's a great, great tool for new investors that are just getting started out. Now, if you're not interested in buying an ETF and buying a pool of companies like this, and you want to just buy individual companies, here is what I would recommend. If you're just getting started, you need to focus on great companies with great business models. And there's very few of them. And the companies that are great with great business models have been around for a long time. They have a lot of cash in the bank. They're already profitable. They're doing very well. They're probably going to be here in 20 years, and they're probably going to be bigger in 20 years. That's what I would classify as a great company. And for me, the top 4 great companies on my list are Apple, Microsoft, Amazon, and Google. You could put Facebook and maybe Tesla on that list, but these are kind of my top 4 here. Now, if you're interested in doing a little bit more research and learning a little bit more about individual companies that aren't great and easy choices like this, that's when I would recommend checking out my Stock Market Fundamentals course. You need to have a little bit more knowledge to really go in and evaluate companies and really start to do research and figure out the potential. But if you want to do that, I've put together a completely free course that will walk you through everything you need to know, and it's completely free when you sign up with the link in the description down below. That link will take you to Skillshare, where when you create an account, you get 2 to 4 weeks of completely free access to my 10-hour course that has over 10,000 students who have gone through the course, over 380 reviews, and over 1.6 million minutes of watch time. I promise you, it'll be the best free course that you can find online. It's hosted on Skillshare. It's completely free. It's not going to cost you a single penny, and it's going to get you started on the right foot. It's going to give you everything you need to know to go out there and feel confident evaluating companies, building your own portfolio, and getting started on the right foot investing in the Canadian markets. And I promise you, it's completely free, so you got absolutely nothing to lose. Now, if you get any value out of this video, please remember to click that like and subscribe button. There's 2 free stocks with Wealthsimple in the link down below. You'll also find all of my resources down there, and I sincerely appreciate you watching till the end. Thank you so much, and we'll see you soon.